Hello, everyone. Happy Friday, and welcome to the first Fratarcangeli Friday market update of 2026. I hope everyone's off to a strong start to 2026 in this first full week, which has been no dull moments, to say the least. We've had, going into the start of the week, we had the Venezuelan conflict and essentially taking over for the regime, and a lot to come on that topic. And we've had a market that has taken off up 1,000 points on the Dow Jones and similar on the S&P and NASDAQ, and then a little bit of a pullback. And here we are today on Friday on the heels of the jobs report, which I'll touch on first. And we're watching this very closely because interest rates are a topic as we enter into a midterm election year, and what the Fed is going to do with interest rates, as well as who the new Fed chair will be. But we're watching the data very closely, which we're starting to see some more clarity on. The job data came in at 50,000 new jobs, off from 60 to 7,000 expected. What this basically tells us is we're seeing a cooling labor market. More folks are keeping their part-time jobs due to the fact that full-time jobs are not quite as readily available. But we're seeing, I think, a little bit more of a consistency in the job reports. Unemployment went from 4.5% down to 4.4%, which is a little bit odd considering that we didn't see as many job creation. 50,000 was the job creation as opposed to the 60 to 70,000. So I think the general takeaway is the Fed is probably seeing a cooling in inflation. I would anticipate the January, I believe 27th is when the meeting is in January with the Fed. They'll probably leave rates alone, but there's a high anticipation that we're going to see a rate cut in March. There's a range from 1 to 3 cuts expected for the year, but I think we're going to be very, very focused on the data. And so far, the data does point towards the fact that we have a cooling job market, and we'll be watching that very closely. We're also getting ready to kick off fourth quarter earnings for 2025. And of course, we've had some very robust earnings growth over the last several quarters. As a matter of fact, it appears as though we're going to have the 10th consecutive quarter over quarter earnings growth. We're seeing consensus come in at about 12% year over year earnings growth for Q4 2025, coming off Q4 2024. That is very strong relative to what we're seeing. What's also very compelling is a number of companies have come out for the second straight quarter and guided higher. What I'm saying basically is companies came out and said what we had originally said we're going to make, we're going to increase. I can tell you that is abnormal. And that's the second straight quarter that we're hearing companies come out and say they're going to make more. They're guiding higher. What we've recently seen in many quarters is where they guide lower. So this is a very strong sign that earnings is going to be the driving force of, I think, the optimism and the more upside that we could anticipate for this year. I think there's a moderate upside anticipated for this year. We've had some really strong 2024, 2025 market returns. I would tell you, based on the fact that this is a midterm election year, and many times when you have election years, as we well know, you're going to see a lot more uncertainty. There's going to be a narrative out there from one side of the aisle versus the other side of the aisle. One side's going to say, we need change. The other side's going to say, things are great, which is correct, I think, somewhere in the middle. But I think that uncertainty creates volatility, and volatility creates opportunity. So we're going to be watching very closely. I think it's going to be an opportunistic year that'll end positive due to the data, due to the earnings, due to the expansion. And of course, we're looking at the earnings. I'm just going to make one last point on earnings. Tech earnings is expected to be for this quarter four for 2025, 12% year over year, but 17% earnings growth in tech and 4 to 6% in every other sector. So tech is the leader in earnings, and we're going to be watching which sectors lead in 2026. I believe tech will be a part of the leaders, but I'm not sure they'll be the leader for 2 consecutive years. Historically, when you're a leader in market upside for an extended period of time, you tend to have other leaders step up, whether it be industrials or healthcare or materials. We're seeing materials, specifically silver, break out. We're watching that very closely. And I think that's a direct correlation to the data centers that we're seeing built all over the world, especially here in the United States, that demands a great deal of materials. And I think silver's a part of that. So a lot of good things happening there. And in addition to that, of course, as I mentioned earlier, the geopolitical turmoil. I mean, we all hear the noise in the news. And of course, I think in general, it's very positive from what I'm hearing. I think you just have to ask folks that are from Venezuela, what do they think about the regime change? Everyone I've talked to, they are ecstatic. I have a cousin on my wife's side that they are celebrating this change. They were concerned about being able to go back and see their relatives. And so I think in general, that tells you this is probably a good thing, although you're seeing some of our adversaries, China, Russia, and you're seeing other countries like Cuba that are not happy about this. I would say that's a sign it's probably a good thing, but we'll see. In addition to that, before I close out for today's first Friday market update, I'm just going to talk a little bit about some of the tax changes or law changes relative to retirement plans. Starting in this current year, 2026, the 401k deferral contributions for everyone under the age of 50 has the ability to defer $24,500 throughout the entire 2026 year. And essentially, that's up from $23,500, which is pretty normal to see an uptick. What's really changed is that if you're of the age of 50 or older, you have the ability to contribute an additional $8,000, which is up from $7,000. So we're contributing a larger amount. But what's happening is those that are high earners are forced to actually make that contribution after tax. And therefore, that is going to be a Roth contribution. So the $24,500 could go in and pre-tax and grow tax deferred. And when you take it out later in life, you pay taxes on it. The catch-up that you're allowed to make a contribution of $8,000 additionally of your salary is now going to go in after tax and grow tax-free. I see that as a positive because now you're going to have some tax-free growth in addition to tax-deferred growth. Also, in addition to that, you may need to take a look at your 401k plan to make sure that they offer a Roth component. So those of you that we know well, please reach out. We'll help you with that, making sure that you're fully lined up, prepared for 2026 to take advantage of the volatility, take advantage of the changes and our ability to defer towards our ultimate goals. And I will leave you with this. I expect this to be a productive year. I expect us to take advantage of opportunities like we did last year. And I can tell you the team that I'm so proud of here at Fratarcangeli Wealth Management that just had our 30th anniversary, December 18th, and as we well know, as we talked about, ranked #1 by Forbes in our state that we're domiciled, as well as top 50 in the country now for the 5th consecutive year. We are very locked in and very focused on helping, guiding clients through this maze of volatility and make sure that we don't get emotional, we stay stoic, and we execute. And I look forward to seeing you all soon. Thank you all. Bye for now.